man's a fantastic man. He really is.
Ladies and gentlemen, please welcome.
What's going on, everybody? It's Dan French streaming live from Las Vegas. We have a half studio of people in today. But we have a great guest that we have on today. Thank you guys for tuning in. If you guys have not hit the like button, please do. Also subscribe if you like the content as you're watching this episode. And this is the most real and behind the scenes information regarding financing, real estate, money talk, entrepreneurs like myself here in Las Vegas. And in studio, I have a couple of familiar faces. I'm going to go ahead and introduce my guy over here, Rich Salas. What's up, buddy? How are you?
I'm doing well. How you guys doing?
Good, man. What's going on with you today, man?
Well, I want to apologize for missing last week. I was a little ill. I was a little under the weather. So
what happened? Where were you at, buddy?
I wish I could say that I was out too late partying and that I just couldn't make it in because I was hungover, but I think I ate something, unfortunately.
Yeah?
Yeah. So I was just a little under the weather for a few days, but I'm fine now. So
yeah, man.
I'm back.
How was your weekend? Did you do anything exciting?
Okay, so I did finally make it to that John Fogerty concert last weekend. So we had a great time. It was at the Wynn. He did a great, he put on a great show. I've seen a couple of other, old rock and roll bands in the last few years, and sometimes some of them, you can hear them maybe struggling a little bit with their voices, but John did a great job. He put on a fantastic show.
Yeah.
I think everyone loved it, and it's really nice theater. The Wynn's a nice place. So
yeah, I think it's crazy because we went, I had Brett on the show. We went and saw a concert, and amazing concert. Now, I was a little, I wouldn't say upset, but I was saying, I went, there was Korn, right? And System of the Down, right? Over at the T-Mobile Arena.
That'd have been awesome.
And man, it was like a surprise thing with Korn. And actually, Korn did a better show, or had a better show, in my opinion.
Than System.
It seemed like System, they got the cause and they're doing their deal, but it just wasn't the same concert,
Yeah.
So, I don't know. To me, it was cool. I mosh pit a little bit down there, but, me at my age, I'm going to sit up in the stands and I'm going to be like, go at it, boys and girls, go at it.
Dude, if it was like 2003, that would have been like, I would have been all over that.
Listen, there's a day in my time, or time in, I don't know, whatever that means, but there was a time in my life that I was out doing the mosh pit thing just a little bit, and, you got a little bit too much animosity, it's like too much built up, that testosterone levels coming out your ears.
Yeah.
So go ahead. What were you going to say?
I was going to say I was at an Incubus show and we were like on the outer rim of the mosh pit.
Yeah.
And I wasn't even moshing, and some kid like bashed his head into the back of into my nose.
God,
and I was like, I wasn't even moshing, and I left with like a broken nose. And I was just like,
man, that's got to be the worst luck ever.
Yeah, I
got a broken nose.
I wasn't even moshing. I was like a broken nose.
Let's go ahead and introduce Esmeralda Lucia. She's from WFG, and we're going to talk with her a little bit. This is not our guest, because Esmeralda's on every week. so we're not going to say Esmeralda's the top person here to talk to today. But you know what? She's definitely somebody that has an interesting point of view. So what's going on with you today, Esmeralda?
Well, I like my introduction. So I'll start off with my slogan, Tu Favorita. That's my slogan, so you can introduce me.
What is that? Does that mean your favorite?
Yeah, that's my slogan.
Wow.
Your favorite.
Your favorite. I gotcha.
It's in my business card.
And anything new happening in your life?
I don't know. I think every day is a great day.
Every day is a good day?
Every day is a good day as long as you can wake up.
And you don't have to use your AK, right?
That's right. Or my credit card. No, it's fine.
All right, let's bring in our guest. This guy is a gentleman that is actually going to give us a lot of information, and I try to bring on people that will give you value, right? You out there as people looking for things on YouTube, I understand there's a lot of different things you can find on YouTube, but at this channel, we want to try to give on-job experience and also talk about things that will benefit you if you're going to buy a home, if you're looking for a real estate agent, whatever your situation is. So let's go ahead and without further ado, as they say, let's go ahead and bring on Mr. Carl Bierback from Radian Mortgage Insurance Company. What's going on, Carl? How are you, buddy?
Hey, I'm doing well. Thanks for having me. Excited to be here with you guys.
Yeah, man. So we're all here. We're just kind of hanging out here trying to figure out what is mortgage insurance premium. What is that?
Yes. What's the difference?
Because I think a lot of people want to talk about what's the benefits and what changes that could happen with mortgage insurance. We're trying to give information regarding when you need it, when it can be canceled, and we'll go through a series of questions that I have for you. So let's talk a little bit about what mortgage insurance, and does everybody out there have to have it?
Sure. So very high level, mortgage insurance, unlike homeowners insurance, actually protects the lender. So mortgage insurance protects your lender, and it allows you, instead of saving up 20% for a down payment, to put as little down as 3%. Homeowners insurance, on the other hand, is what you get in terms of a policy to protect you and your home in the event something happens catastrophic within the house. So PMI, on a very high level, PMI stands for private mortgage insurance. And again, it just protects your lender and allows you the ability to keep more money in your pocket, not spend several years saving up a down payment, and get into a home much sooner.
So if you're somebody out there that is going to put down, let's say 3%, 5%, 10%, does somebody, how does that percentage of mortgage insurance, how much is carried towards those types of down payments? Because there's different thresholds, correct?
There are, yep. So the highest threshold is what we call a 97% loan to value ratio. And what that means is you're putting down 3% towards the purchase of your home's 100% value. And then it goes down from there. So it drops to 5% at 95% LTV. You can do 10%, 90% LTV, all the way down to an 85%. Once you put down 20%, though, mortgage insurance is not required. So that answers your question of, does everybody have to have it? Absolutely not. It's really only there for low down payment purchasing and financing.
Yeah, and also too, let's give the audience a little bit about what your background is. Like, how did you get started? What is your role at Radian? What is Radian? Right? Is Radian a mortgage insurance company? What is that? And how do you what does all that entail?
Sure. So I've actually only been in the mortgage industry for about 10 years now, and I actually started blindly as a loan processor. And for those who do not know what a loan processor is, they're the person behind the scenes that collects all the documentation for your loan officer, such as Dan, to get it ready to go for review, for approval, or hopefully not, but maybe a decline. But nonetheless, works with you to gather all that information and gets it through. So I walked in blindly, knowing absolutely nothing, had never owned a home, had never gotten a mortgage on my own.
Wow.
And just walked in blindly, and they say something sick. I took a liking to it, and eventually, went into the loan officer role. Then into management, and eventually found my way over here at Radian, which is strictly a mortgage insurance company. We do not actually lend the borrowers the money. We simply insure those lenders who are lending you the money.
So most people don't want to have mortgage insurance. We get it. Okay. We understand, right? They don't really factor it into the payment. I think there's a lot of misconception out there because you go online, there's a lot of tools, there's that mortgage calculator, but they really don't break it down. Like, what is the total payment? And it's important because mortgage insurance has a direct impact on your payment. Also on you, if you have a bad credit score, or maybe say a subpar credit score versus a stellar credit score, it's going to have a big impact on what insurance or how much insurance you pay on a monthly basis, right?
So that's partially correct, yes. So let's rewind, and there's multiple types of mortgage insurance that you as a borrower can opt into. So the one payment that you just brought up is a monthly payment. It's a monthly amount that is added into your overall mortgage payment, and it's paid monthly just with your mortgage statement to whoever you're making that payment to, be it your lender, a bank, and so forth. Another option, though, is, again, since you're not putting a large sum of money down, maybe you have a large sum of money saved up and you have a little extra that you can bring to the closing table and just pay the MI up front. Pay it right at the closing table. That way you're not paying anything monthly, and it keeps your monthly payment down.
What is that?
And then there's,
I'm sorry. What is that called? I mean, because people don't, when somebody gets into a loan, they don't really know that you have these options where you can do a lump sum and not have it, even if you're putting 5% or 3% down, right?
Absolutely. Yep. And what we call that a single premium. So a borrower paid single premium instead of a monthly premium. And actually, funny story, I've only, in terms of my mortgages, have had single premiums, simply because as a lender, you can have your lender price out the differences. You can see what your monthly MI would be versus what it is to bring to the closing table. And I just personally found it best for me to put a little less down towards the home purchase and put a little more upfront towards the MI to eliminate that monthly payment. Now, it's really just a preference. MI these days, like interest rates, tends to be a little bit lower than it has in years past. So, that's a huge savings for a borrower.
Hey, let me ask you, Carl, when you talk about the upfront, the lump sum, which I didn't even know was a possibility, or I thought maybe you had to do it maybe for a year or something like that. Is it for a set period of time, though, or it's literally you make one lump sum payment and you never have to pay mortgage insurance premiums again on that loan?
Sure. So that's actually a really good question. When you're paying a single premium, it's a one-time payment at closing, so you no longer need to pay MI on that specific loan. Now, it is important to note that an MI policy does not carry with you, the borrower. An MI policy only carries with the loan itself. So if you did a single premium and then 10 years later you decided to do a refinance and you still did not have 20% equity in the home, then you would need to opt into either a new single premium or go the monthly route at that point. So that is important to know. That is, in terms of a single premium, probably the biggest question. It does not follow a refinance. So new loan, new premium, same loan, one-time payment upfront.
Do you pay any less if you pay the lump sum upfront premium than if you pay it every month? Do you get a deal for paying it upfront?
So it really is going to depend. If it's your forever home and you're going to be in there and you're only putting 3% down or 5% down, then yeah, it really might make sense to do that single premium, because if you look at what's called an amortization calculator, which basically shows how much you're paying towards principal versus interest on your loan each month, it would take an extremely long time to get down to that 80% loan to value ratio if you're only putting 3 or 5% down, in which case you're going to be paying that monthly premium for a really long time.
Yeah, so there's
if you're
Go ahead, Carl.
I was going to say, if you're putting 15% down, right, then maybe the monthly makes sense because you're likely to hit that 80% mark much quicker.
Okay.
Yeah, I was just going to say about home insurance versus private mortgage insurance. Everybody thinks it's kind of wrapped up into the same thing, but it's completely different. And your insurance is really to protect the lender in case you default on the loan. Is that right?
That's absolutely correct. So a lender, their asset towards the loan, the only asset they have on that loan is the property. So the less that a borrower is putting down, the higher the risk it is for a lender to do that loan. And so we hold the lender holds an insurance policy with us in case by chance there is a default. Now that said, I really don't think many people opt into a mortgage assuming that they're going to default. And that's where that whole hesitation of, why am I paying MI? It's not helping me at all. Of course, I'm going to continue to pay my bill. This doesn't make any sense. But that's really what it is. It protects the lender and just allows you, the borrower, to, again, keep more money in your pocket, not have to bring so much to closing, and really just get into a home sooner, especially if you're in that first-time home buyer market, fresh out of college or starting a new career.
So my question is this: for that type of insurance, for what kind of loan is it? Is it FHA, conventional? Is it VA? Who?
I definitely want to ask you about VA loans.
Well, VA doesn't have mortgage insurance, guys.
Yeah,
so,
but we wouldn't know that, right? I wouldn't know that.
Well, then that's a good question, though, because if you're somebody out there and you don't know, FHA is a set amount. Right. Basically, it's a set percentage. Where this is a conventional loan. Now we're dealing with a lot of people with conventional loans right now because of the price point. So and I'm not saying we don't do or we don't help FHA buyers or VA buyers, but this is a predominant position we're at in this market right now is conventional loans, correct? Yeah.
Correct, absolutely. And actually, Esmeralda, I'm glad you brought that up. So correct, VA does not have PMI or MI. However, FHA does. FHA requires the mortgage insurance policy. It's the only option that I'm aware of for FHA is a monthly premium. Radian does not insure FHA loans, so I'm not the subject matter expert on that. But what I can tell you is, unlike on a conventional loan, conventional meaning, it's backed by Fannie or Freddie, an FHA loan mortgage insurance really lasts the life of the loan. It never falls off, regardless of how much of the principal you've paid down.
So you have to refinance to get out of it?
You do. It's the only way to get out of MI on an FHA loan.
Okay.
Oh, that sucks. So
Yeah.
you can pay 6
Something
months
to
ahead.
keep in mind.
Yeah, I think when you look at these things that we're talking about here with we're talking with Carl here. He's from Radian. So when you look at what's going on and you see that, why am I having to have mortgage insurance? Everybody's like, well, do I really need to have this? And if you look at other countries, there's other instances where countries don't allow you to put down 5 or 10%. And people are like, well, I don't want insurance. This is not what I signed up for. I'll just not buy a house altogether. This allows people, and it's the American dream, as everybody says, and we'll talk about this with Carl, but it allows people to come in and buy a home at a cheaper or less of a down payment. If this was not here, you would have to put down 20 to 40%. I think in Germany, one of those countries, I think it's Germany, they require you have to put 40% down just to buy a house. It's not like anybody can just go buy a house versus here.
That would be impossible.
So it's a huge benefit, right, Carl?
Absolutely. And what I would bring up there, and I'm sure everyone's seen it, right? Housing, especially this year, has appreciated so rapidly that even if you thought you had saved up 20% 2 years ago, likely for that same home, you have a lot more work to do now to get to that 20% mark. So what Radian's, our whole mission here is just going back to what you said, Dan, insure the American dream. So we're insuring the lender with the policy, and we're insuring ENF, ensuring the general public, the borrowers, the opportunity to get into a home and start building upon that American dream.
So, Carl, let me ask you a question about what happens when someone goes into default. Like, how is the lender actually protected by the policy? What does the lender get? What kind of benefits does the insurance give them?
Sure. So on a very high level, because that's a lot of math to get there.
Okay. Yeah. I mean, just a understandable layperson explanation.
Yep. So basic, very high level, and this is the explanation I got before I really knew what MI was as well, is they just get a percentage of what the home is selling for versus what the lender has invested into it. So they get just a little percentage. It's not a lot. Radian may opt sometimes to, buy the house directly from the lender. It's very rare. Again, it's really just some money towards the lender, so they're not out 100% on the home in the event of a foreclosure.
Hey, Carl, how do you avoid private mortgage insurance? People want to know, is there a percentage you put down? I think everybody kind of has an idea what it is, but just throw that out there if you can.
Yep, it's 20%. So easy math, if you're buying a home, I don't know where, but if you're buying a home for $100,000, you have to put $20,000 down at closing to avoid MI.
There's no way to get below. I mean, it's like all the way up to 20%. There's no wiggle room. I mean, some people put 15% down. You still have to get PMI. Is it always 20%?
That's correct. On a standard conventional loan,
Okay.
yes. Now there are always, sporadically out there what are called portfolio loans, which are privately held loans with the bank that do not follow Fannie, Freddie guidelines, conventional guidelines. They may have different things that do allow for a little less down and avoiding MI. I have in the past seen those. I don't know if there's any out there right now, but they're few and far between, and typically come with a higher interest rate to make up for that.
So Carl, they said 78%, right? That you can technically cancel this out with your servicer. So let's say you hold your house, you got it for a few years, you built some equity. What is the process of them canceling? I mean, because you said refinancing is the only way on an FHA. Can you refinance on this conventional loan and get out of this house if you have enough equity? And also at 78%, what does that do for you?
Sure. So 78% is the magic percentage, so to speak, in MI cancellation. By law, whoever is holding the loan, so whoever you're making your mortgage payment to, they have to have some type of tracking system to know when you've reached a 78% equity in your home, and they are by law required to drop the MI. No questions asked by you, the consumer. So you don't have to worry. Once you hit 78%, it's the lender's responsibility to reach out to Radian and cancel the policy. Now, at 80%, because again, that 20% down is that magic number, at 80%, many lenders do allow the borrower to request MI cancellation. Now, there's, every lender is different. Every lender has different overlays to that. Some require, you have to have paid the MI monthly for 12 months, or if it was a single premium, paid your mortgage payment for 12 months, up to 24 months, I've heard. But generally, there is a payment requirement in terms of how many months you need to pay. And it's usually on the borrower's end to go out, work with their lender to set up an appraiser, pay for the appraiser to come in and do the appraisal on the home to verify, that it has risen in. Let me back up. Overstepping myself. So if you haven't paid it down to 80%, there are other ways to eliminate MI. One being housing appreciation. And in this market, we've seen that rapidly, right? Houses have appreciated very quickly. So if you feel like your house has appreciated and you now have 20% equity in there, even if you've only paid, let's say, $10,000 towards the principal, but it just appreciated that much, that's when you would want to reach out to whoever you're making the payment to and say, hey, let's have a conversation. Housing is appreciated. I'm sure you know that. I believe I have at least 20% in based on my loan amount and what the house is worth today. How do I go about eliminating this MI now?
I'm going to guess.
That's when, typically they, reach out to you, have you set up an appointment with an appraiser to appraise the house, confirm, and then go about, a cancellation policy that way.
I'm going to guess you've seen a lot of that in this past year.
So we have, but also what we've also seen, and Dan, you can probably attest to this, is
Absolutely.
Interest rates just continue to drop, right? They're just historically low. So it just made sense to not only request MI cancellation, but to do a refinance to get into a lower interest rate. So we've actually seen a lot of refinance MI dropping off.
Yeah, and I think it's a good opportunity. Now rates have subtly gone up recently, but overall, yes. I mean, when you're hitting anywhere in the 3 to 4% range, I know everybody's like, well, you're a lender and you might be given a bias, answer to this question or this statement you said. But guys, folks out there, rates have been north of 10% before. When I got into business, it was 12%, 13%. So, it's cheap money. And yes, it's an opportunity still to refinance, even if you haven't, to remove the mortgage insurance. That's another perk that people don't really understand. You can remove the mortgage insurance, obviously lower your payment, on these refis and get a lower interest rate. So
I have a question. Sorry to interrupt you.
That's all right.
So I'm just curious. So you could refinance as long as you reach the 20% in equity. So it doesn't matter the time frame, or so let's say I just got my house. If I wanted to refinance, how soon can I refinance? Not until it reaches the 20% in equity, or I'm confused. I need to be clarified on that.
Carl?
Sure. So really there's no time limit. You can usually do a refinance, within a month or couple of months. No time limit on that, especially with the MI piece. But what I would say is, there's always closing costs associated with a refinance. So, if you've only closed a month ago, how much did interest rates really drop? How much did you pay in closing a month ago versus how much are you paying now to do the refinance? Does it really make sense?
Right.
And also, if you only put 10% down, a month later, did it really go up an extra 10%? I don't know if it would have gone up that much.
No, it's fine.
In a dream world, maybe. I don't know. But to answer your question,
it was just an example, you guys. Calm down.
Yeah.
I'm not trying to refi. I was just curious.
So,
I was
Carl,
like, okay.
Carl, let me ask you a little bit about like the actual like let's say you're not doing the lump sum and you're going to do a monthly premium. And I know that that's something that discourages a lot of buyers from, maybe going out there. They think, oh, well, I want to save up enough money so I don't have to have mortgage insurance. And obviously, I'm guessing that, we talked about the amount that you put down, the lesser you put down, loan to value ratio, the higher the mortgage insurance premiums are going to be. But what else affects that number? Like, I'm assuming, of course, sale price is going to affect the number, but does interest rate of the loan also affect that number? How much does the credit score of the buyer itself affect that number? Are there other factors out there that we may be unaware of that we should know that affect that, how much that number is going to be?
Absolutely. So awesome question. And it's a really relevant question right now because this has all kind of changed, I would say, in the past 2 years even. Credit score has always been something that affects MI pricing. I would say, the sweet spot, is 680 and higher. At a 620, you can still get MI, but that's where you're really going to start to see those higher premiums. And then other things that affect it, debt to income ratio. What is your debt to income ratio? What are you bringing in versus what are you paying out each month? What's that percentage? That definitely affects it. Below 40 was always the sweet spot. Still is. I would say if you're below 40, pretty good DTI is what it's called. Now a new one is number of borrowers on a loan, right? So if you have 2 borrowers, typically you're going to get not a huge break, but a little bit of a better premium than just 1 borrower. So that's something new that I've seen come about in the past 1 to 2 years.
Yeah, I want to ask you a question here, Carl. On the PMI versus MIP, it's really the same thing. We most people, I think, know that. Is it tax deductible, though? Like, if you're paying that over the course of a year, is that really tax deductible?
So the answer right now is yes. However, that changes constantly. But there's always legislation going through regarding MI and it being tax deductible. Why? Who knows? But there's always legislation out there. But right now, for 2021, for this year, it is tax deductible. By no means am I a tax expert. I really only follow whether the answer is yes or no this year. So this year, yes. But it is something that if you are paying MI, you want to make sure you're asking your CPA or whoever's doing your taxes each year, if you're paying MI, simple question of, can we deduct it this year? It might not always be, but right now it is.
Yeah, and I think I know a couple of years in the past, I think that it had run out, and then they repassed the law, making a few years after it tax deductible again. And some people had to amend their taxes to get the deduction for it. They're always screwing with taxes in the government.
Yeah, it is. And PMI, I mean, it's a payment, yes, but why they're spending so much time going back and forth on it, I don't know. I mean, it's helping, but is it really making that much of a difference in the big, huge overall picture? Probably not. But to an individual like myself or you, it definitely helps if it's tax deductible. So hopefully they keep it the way it is now, and the answer remains yes. I just don't have a crystal ball.
We got a question here real quick, Carl. Cyrus said, what is the difference, or how is private mortgage insurance different from mortgage insurance or home insurance? So I know we kind of, dabbled into that a little bit. Can you talk to or explain that real quick?
Yep. So private mortgage insurance, PMI, which is what Radian, the company I work for, does, is we insure the lender. Whoever is lending you the loan, we insure the lender. And what that does, and the reason you're paying the premium, is it allows you to put less money down at closing. Whereas a homeowner's insurance policy protects you, the homeowner, in case of, water damage, fire damage, something of that sort. So you're paying that premium, and it's protecting you in the event of, a tragic disaster such as that.
Carl, what about shopping mortgage insurance? I know you got private mortgage insurance, you got home insurance. Can you actually shop
do you have any
private
choice?
mortgage insurance?
So in order to shop PMI, and it's always good to ask questions as a borrower. I think the more informed you can be, the better it is, which is why this podcast is so great. Of course, I want to say, send all the MI to Radiant. Yeah.
What about my Chanel bag? Is that a good? Can I put that on the policy?
The answer is, MI companies, our rates vary, just like interest rates vary with lenders. sometimes it may be minimal in terms of, $1, $2 a month. Other times it might be $10, $15 a month. So it never hurts to ask your lender, can you just check around, because the lender has to quote the MI. As a borrower, we can't quote it. The lender has to. So always ask your lender, what is my MI premium, whether it's a single premium that you're paying upfront at closing or a monthly premium. It doesn't hurt to shop around. So that's just an honest answer. Again,
most lenders,
please send it all to Radian, but you got to go where it makes the most sense sometimes.
So most lenders, they don't have like they do or they don't have like exclusive arrangements with their PMI. I would say insurers. Most don't. Okay,
yeah,
so they use a myriad of different companies on their loans.
Yeah, they may have a preferred one that they send the crux of their business to, but I would say the majority of them have at least 2 or 3 other MI companies that they can price out.
Okay. I was going to say this, do you, as a private insurance, mortgage insurance, do you guys, there's a risk threshold. So at what point do you say, hey, you know what, your credit score is just too low for us to actually give you mortgage insurance? Because there is a break-off, is there a tier, or is there different tiers? Because mortgage insurance, private mortgage insurance is also, they judge you the same way as your credit, not your credit score, but your interest rate. So it's very similar. Is that not right, Carl?
That's absolutely right. And that cutoff is 620 is really the lowest we go right now. Now that could change, there's talks of it starting to go a little bit lower maybe in the future, but right now it's the 620. And again, we just go by Fannie and Freddie. So if they tell us, they want us to start insuring below 620, I'm sure the MI companies will fall in line with that.
So I don't know everything about loans, so this might sound like a dumb question, but do they do mortgage insurance on jumbo loans?
So the answer to that is yes. If it's a conventional jumbo, absolutely. If it exceeds the loan amount limit for a conventional jumbo and it's going what's called a portfolio loan, where it's a private loan with the bank or the lender, some of them require MI. Others, again, adjust the interest rate accordingly to it. So that's really more of a product specific. But if it's a Fannie, Freddie jumbo loan, yep, mortgage insurance is there.
So if the home equity goes up, Carl, this is another good question. Will the premium payments go down as well? So like as you're paying into your house and you start to build equity, does the actual premium or the amount that you pay on mortgage insurance, does that actually go down for people out there?
Good question. The answer to that is no. So whatever the premium is at closing remains the premium until that MI falls off the loan.
Okay. That's after it reaches the 80% or whatnot.
Yep, 80% again is when you can request it with your lender and work with them to have it removed. 78% though is when they're required to drop it off.
So I don't know.
Until then, you're paying that same premium.
So what if they forget, and then you're like, do you get like interest back, or?
Do you get?
I think I've overpaid like 4 months. Do I get like interest on that extra?
Hey, that's actually a good question.
That's a good question, actually. Yeah. What if they don't do it?
That is a good question.
Yeah.
That I don't know.
I think you need to find out.
But I'm sure there is some sort of
is there a back pay
legality around it.
I don't know if you would know the answer to this, but do you have any idea how many, like out of all the mortgages going in the United States, how many of them have PMI attached to them?
Oh, I do not.
Okay.
And that's actually a good question. If I find the answer, I'll definitely let you know though.
Yeah.
Yeah, so let's go back. Let's talk a little bit. So we're talking about mortgage insurance, and do you have any situation or questions that are not really questions, but stories that maybe you've gone through? Because I know there's a lot of things that people say, well, I didn't factor this into my payment, especially people that are on the borderline. They're trying to max approve for getting a house, and their payments just 50%, 55%. And maybe that lump sum, paying that lump sum might work because now you're removing the insurance. Maybe that split premium that people don't understand might work, because what that does is when you're factoring in HOA, SIDS or LIDs, you got taxes, you got insurance, home insurance, any little help, maybe half, reducing that by half could potentially help your purchasing power just a little bit, especially in a high competitive market.
Absolutely. So one of the biggest things with working at Radian that I've been able to do is really address those concerns that you just brought up in terms of the monthly payment being too high, that debt to income ratio because of the MI. As a borrower, I'm not thinking about MI, I'm thinking about how much do I need to pay in principal and interest on my taxes, right? And then all of a sudden now I have MI, my debt to income ratio is just way too high. That's where that single premium sometimes makes the most sense, especially if you were planning to put 10% down.
Yeah.
Maybe now instead you put 5% down, you pay the MI, you keep that monthly payment lower, and you roll with it that way. Or there's also what's called a split premium, where you pay a little extra at closing up front, and it drops that monthly payment down a little bit. So that's always an option. And again, that was called a split premium. I don't think I mentioned that one earlier, but that's out there too. And I've had, a lot of borrowers have success because I'm sure you've seen it. You're racing to the finish line, getting that loan closed, getting them in the house, and then all of a sudden there's a problem with, the debt to income ratio, whether it's, the income was wrong or credit was repulled, and now there's a new trade line on credit.
Right.
So MI is one of those things. It's like a rubber band. You can really play around with it on a loan to
Carl,
make the loan work and qualify. Yep.
Carl, so I don't want to put you on the spot, but if you're all right with this, do you think I could throw a few real basic numbers at you, just because I know examples really help me? I'd really like to know, like, maybe how much that lump sum payment would be versus the actual increase in down payment.
So I'm going to hold off on that.
Okay.
Our rates are filed, but I would want to just check with my compliance.
No, it's okay. Sure I understand. No problem.
On video.
I understand.
But I would say, again, if you're putting, the 5, the 10, and certainly the 3% down, really the 5 or 10 though, definitely check out those single premiums. Have your lender run them. Have them compare it for you.
But I mean, it's going to be less probably than another 5% down. That would be would make it make sense.
Exactly.
I'm guessing, right? Okay.
So let's talk. Yeah. Let's talk about it, Carl. So you got a few things that you have up your sleeve here with some of the things that your Radian actually offers. It's called the American Dream. Is that right? Is that what it's called?
It's called Achieve the Dream. Actually.
Achieve the Dream. I'm sorry. Achieve the Dream.
The dream.
Explain what that means. I don't know. I got an American Dream on here real quick.
Living the dream? What?
Let's take a look at this.
We're achieving the American Dream. Yeah.
That's right.
So Achieve the Dream is a website. It's actually just www.achievethedream.com. And it's truly something Radian put together. We kept our branding off of it as much as possible to help educate that home buyer market. Again, if you don't work in mortgage, there's really a whole lot that you don't know, especially if it's your first time, buying a home. For example, what does PMI stand for? What does LTV? What is this DTI they're talking about? All these abbreviations, right? So we have a glossary, breaks it all down and explains what all of that is on this website.
I mean, they got stuff on here like equity and appreciation calendar. You got stuff you can really mess around here with. Amortization calendar, checklist library. Yep. I mean, under the tools section, there's a lot of information that a lot of people can go there and really get a lot of great information to get started, just to kind of understand why you need this stuff. I think it's like a hidden secret why people think, well, why do I need to have mortgage insurance? Like, is this something that just people, or not people, but corporations and entities are just trying to take money? Yes, it's obviously a way for a corporation to make money, but also with that said, you also have the ability to get into a house putting really almost nothing down. Yeah, I mean, 3 to 5% down. You go back. I mean, there's not a lot of people that you can talk to that's probably outside the U.S. that says, "Hey, I'm going to put 3 to 5% down and be a homeowner."
Exactly.
Yep. And there's all sorts of calculators on the website too. Again, it's achievethedream.com. If you get 5 minutes, click around on it. But there are all sorts of calculators, help you estimate how long it's going to take you to save up a certain down payment you're trying to do. What would my mortgage payment be on this home price with 3% down, 5% down, 10% down? especially on these higher loan amounts these days, the difference in a mortgage payment between 5 and 10% might not be as much as you think it is, right? So it might make sense. Hey, let me keep this extra money in my pocket. Let me buy the MI at closing. And those calculators are just a great way to see it in real time and give yourself a real visual of it.
Let me say this too. Yeah. So at what point, I got a question here that another question from Cyrus. At what point in the life of the home loan do you suggest to refi? When does factors like interest rate, monthly payments, or years of the loan take into consideration? Now, I have my own thoughts on it, right? I've seen lenders actually go after, well, I wouldn't say go after people, but they would target people saving 0.5% a rate. I've seen people where they don't save very much, and literally 7 or 8 years into the loan, they're looking at refi, where if you're not saving at least a point, doesn't make sense to me, because now you're starting that whole cycle all over again. So to answer the question that he's asking here, I would say if you're saving at least a point in rate, definitely take a look at it. If you're
How much would that be?
It depends on the loan size, right? It's really going to depend on the loan size. But the other thing too is, can you remove mortgage insurance? Right, that's another thing, because that's how much equity do you have. Now, if you're 8, 9, 10 years into a loan, you probably can remove PMI, private mortgage insurance. So it might make sense to refi and not worry about the rate. So I always say, it just depends on what market you're in. It's a case by case. There's not a cookie cutter thing or way for anybody to look at this. It's just, what is your position? How much equity have you built? And then does it really make sense? I think sometimes it doesn't make sense.
No,
So would you deny somebody and be like, hey, this doesn't really make sense? I probably wouldn't move forward with this.
Yes, I would, because at the end of the day, if I do that and they know I have their best interest, because if you start that cycle over, let's say you paid 8 years of interest and you're saving yourself $100 a month. Is that really enough to say, I'm going to go refinance and then start all over? Every loan is front loaded. The bank's going to get their money up front. So if you're 7 years in on paying that interest down, guess what? Now you're starting all over and you're paying that high interest again. So maybe it doesn't make sense, you know?
I even have some clients who they're older, and they had I think maybe 17 years left on their loan, but they're both in their late 70s. And so for them, they make enough income that they can continue to make their mortgage payments. And so they refied, because it's for us, let's get the lowest payment.
They did the reverse.
They didn't do the reverse mortgage. They just refied their conventional. But for them, it was even though we're going to go back to a 30-year mortgage on when we were already 13 years into it,
less.
It's we're going to drop our payment by $500. And and their idea was, we'll probably pay off our mortgage a month before we die, so what's the point of that?
That's my mom. They refied.
So so I mean, they probably won't pay off the house, but they dropped their loan by $500.
Carl,
so it's different for everyone.
You were a loan officer before, right, Carl?
I did. I worked in the origination side before Radian.
The reason I'm bringing that up is, did you ever run into situations where you wouldn't refi somebody based upon the same scenario?
That I just said, yeah.
Yep. So back then, the refi market wasn't as hot. We weren't getting people coming even really a year after doing a refi. But what I would say is that one point was always my rule of thumb. It still is today, even with my own personal refis. It's a good rule of thumb. If it's below a point, probably not going to make sense. And certainly going back to, again, like you said, it's just, I would never be able to sleep at night if I knew, I did a loan and it just didn't make sense to somebody. Yeah, absolutely. I would never want someone to take advantage of me like that. It's just not the right thing to do.
Yeah, but you get these online companies that are throwing everything at you in the kitchen sink about trying to get your paperwork. I'm just, hey, we could save you a half a point. And I'm like, look, I had somebody call me. I'll tell you a quick story. I had somebody call me and ask me, Dan, I'm not going to say the company's name, but it was a competitor. And they said, hey, we're going to save about a half a point. I go, how much are you saving? They're like $150. Oh, and their total fees, though, they were paying a discount of $3,000. Credit's not great. And their total cost out of pocket was almost $10,000. So it's okay, so why?
It's 10 years.
You can save $160, but you're spending $10,000 to do it. Now you got to say, okay, well, let's divide that $160 into 10,000. How many months is it going to take before you start seeing the profits? Right? That could be 10, 12 years.
Yeah, $150. That's that's what?
And are we really going to stay in the phone that long? That's another thing to think about.
Yeah.
That's probably one of the biggest questions, aside from what the interest rate changes to. How long am I going to be in this home for?
100%. I mean, I think, and that's what people don't understand is that when you're looking at this and you're trying to say, well, does it make sense to take away the PMI? Does it, or to try? Yes, I think every shot you want to take a look at that, because as you build equity. Now, I'm gonna throw something out here. Let's say you put 5% down, and now you have 15% equity, but you don't have 20% equity. That's still a lot lower of a payment that you would pay on a mortgage insurance, correct? So like you might be paying $300 at 95% loan to value, which that means you put 5% down. But let's say that if you did a refi, now you have 80% or 15% equity in the house. That would reduce your mortgage insurance. You might still have to have it, but at some point it'll drop off. And if you reposition by getting a better rate and you're getting that smaller mortgage insurance, that also might make sense. Is that not right?
Absolutely, for sure. And like I said, MI rates right now tend to be a little bit lower even than they were a couple of years ago. So that's another thing to think about. Yeah. Right? MI rates vary just like interest rates do, up and down. So for sure, absolutely. Yeah.
You guys have anything else to say to Carl over here? Carl, real quick, man, I want to say thank you for coming on, and you've been a pleasure to work with. I know that this is a lot of good information that maybe answered some questions that people had out there. It's we're trying to give you guys the right information so you can make the right decisions. Anything else you want to bring up about Radian or about insurance and private mortgage insurance?
So I would just say, the biggest thing is PMI is there. Again, it's there as a tool to help you get into a home sooner, to keep more money in your pocket.
Yeah.
But, that aside, at the very least, if nothing else comes of this and me being on here today, and thank you very much for inviting me on here, I would say, take 5 minutes, look at that Achieve the Dream site, especially if you're thinking about either, starting to look for a new home, maybe refinancing. It's just everything on there. There's calculators. Was really just put in place to help, to help you and me, make the most sense of the home we're purchasing or thinking about purchasing or refinancing.
You guys have any other questions for Carl before we chat?
No, I don't think so. But you've answered some really great questions.
Yeah, it's really good questions.
I learned a lot today.
Carl, we appreciate it, man. And like I said, maybe we'll have you back on down the road. A lot of good information, that people probably didn't know that hopefully they know now. And if you guys have any questions in the comment section, I'm sure Carl, you can check this video, and see if anybody else has more questions in the comment section. Okay.
Sure thing. Thank you, guys.
All right, guys.
Appreciate it.
Thanks, Carl.
Carl Bierback, Radian. Thank you so much, Carl.
May I say something?
Yes. What would you like to say?
So this is not a question that needs to be answered. It's maybe more of a rhetorical question, and I didn't want to pose it to Carl because I didn't want to put him on the spot.
Sure.
But there is one thing I have always wondered about mortgage insurance, and it is that, when the lender, if you default, the lender forecloses and gets the house and sells it and gets their money back. So
that's the purpose.
I guess I'm still unclear as to why they need mortgage insurance.
Yeah,
that's the purpose of them having it, to protect the asset, right, in their behalf. So they do have that leverage.
You mean like in case someone destroys the house or something? Because they're going to get the asset through the foreclosure,
if they miss
right?
Payment. It's really if they miss a payment.
Oh, okay.
Not
because
necessarily
they're banking on that income.
Well, let's talk about why it's there too.
Okay.
I mean, if the bank defaults, obviously the bank doesn't want to lose money, right? So if you have 20% equity in a home, that's kind of that sweet spot for people, or not for the banks, to get their money back.
Yeah.
Like if they foreclose, it costs money to foreclose.
Right.
So when you have 20%, it takes a lot less off the bank. Yeah. There's more risk on the consumer. Nobody's going to walk away from 20% equity or even putting 20% into a home. I doubt it, right? Yeah. You're going to do something to try to figure that part out. So the benefit is you get to put down less of a down payment and you get into a house. Most people don't have that option. I'm not going to say that, everybody's kind of accustomed to having these things at their fingertips. Not all countries, not all places have this option where you're putting 3 to 5% down. So let's go into the segue into real estate. So let's talk about real estate. What do you got? What are you seeing out there right now, Rich?
Okay, so I do want to preface that again. I am a part-time realtor, so I don't have as much experience as say some of the other realtors that come on here on a regular basis. But I definitely would like to talk about some of the numbers that came out in September, because they are always a great reflection of the market. I can say, at least for my own self, that I do have a condo in escrow that I listed and it only took 5 days to sell.
Right.
So that's still pretty good, at least from a listing standpoint.
Was it still multiple
I did not have multiple offers, but I will tell you that I'm having some difficulties with someone still living in the unit, so we had to do 24 hours.
That's a squatter, notice. Right?
It's not a squatter. That's not exactly what's going on. But we're just having it's a little complicated, but we did have to do 24-hour advance notice on the showings. If you do key anytime show, you're going to get a lot more showings a lot more easily. And so we only had a few people see it. But we got an offer maybe on the third showing or something like that. So we didn't even really have enough people to come in to get multiple offers, but I would expect that we probably would have had a few otherwise. So if you're out there and let's say you're looking and you're thinking, did I miss the boat, right? Everybody thinks is now, did I miss an opportunity to buy a house? You're in there. Look, I've negotiated deals right now, and I've talked to a lot of people on both sides, and it really depends. There's been situations where there's been a lot of people that put in, I've seen it where they put in offers and then they don't even wire the earnest money deposit, or they put in an offer and the financing falls through at the end, or you put in an offer and something happens, and those types of properties, for whatever reason, they sit on the market. And so it's not always a bad thing to go after a property that's been on the market for a while, because they're probably desperate to get this thing done. They're probably like, how do I sell? In fact,
how do I sell?
I do think what is going to happen is that you had this hot market for all these months earlier this year. And, even at the middle and higher prices were going pretty quickly. And I think that you're seeing, these numbers that are over that median price, 500, 600, they're starting to sit. And I think those people are getting, even though it's not that bad under normal circumstances, they're going to go, it's been sitting for 45 days. We'll take the.
Well, why do you guys think people take a back seat at this point? Like, if you're out there buying and it's like, you know what, I know I'm going to buy. Why is it that during the holidays, it just seems like that's just puts everybody's Christmas. Like, you know what? I'm just going to kind of put it on the side. Now, I get it. It's holidays. Everybody wants to go out and they want to start shopping. By the way, people are shopping sooner.
Yeah.
For
my God, Christmas
all the
stuff
gifts.
Is out. That's so weird.
Yeah, well, it's because they don't think that all the drivers and everything, all the inventory and all the goods and services will be here for Christmas time. So they're buying way ahead of time. But you look at it, and I think as a home buyer out there, now it's just everything's taking a back seat to a point.
It's fall. I mean, things always slow down in the fall. The summer is always the hot months. April to August or whatever, April to July. Those are things slow down at this time of year. That's always been the case. And I don't think we should expect anything different this year. From that,
I still believe, based on conversations I've had with my agents, clients of mine, they say that there is still multiple offers, and it's for the homes that are considered the hot house, right? The house that has everything.
Where's hot though? Is that Summerlin?
No, a home that's already upgraded.
Turnkey.
Yeah, it's nice already. It's already put together. It doesn't
renovated
have to be
or brand new.
Yeah, it doesn't necessarily have to be in Summerlin, but in nice communities that is already put together. Right?
I think it's price point. If you look at 350, 400,000.
That's a good price.
Yeah,
you're fighting
off the shelf.
You're fighting, and you're going to have a line for people to go in and make an offer, unless something has happened where you look at the housing market and you look at it's on the market 45, 50 days,
right.
And now it's like, hey, just shoot whatever you got, and I'll take it and I'll accept it. You know what I mean? So I'm not saying that happens every time. I'm just saying these are things to look at because I'll tell you, I look at these homes still. There's still a lot of homes that are on the market, but there's a lot of pending. There's a lot of in process of being in a contract. Yeah. So the price, if you look at across the board, you look at properties that happen that we saw on Saturday. There's not really a difference right now. It's just almost like we're in a lull type position where it's just very stagnant. It's kind of up and down, minus 10 homes. Yeah. Nothing's really moving. People are listing. What's interesting though is if you look at this chart right here. This chart shows that people are listing their home, the original price that they listed their home, well above what the sales price was. So a lot of people out there that are not people, but just, realtors that are listing realtors. I'm not saying they're guiding their client to say, let's overprice this home.
But they are.
Yeah.
Right?
Being a little.
They always have been.
Yeah.
Look, there's maybe they are coming in for some correction. Maybe they're just saying, hey, we're going to hit a grand slam because somebody's going to come in and say, oh, you listed it. We're going to give you all that, everything that you want. But for the most part, if you look at this graph, the prices of homes are going up, but the list price is not what's being sold for the actual price of when the house sells.
Yeah.
People are reducing, and we're seeing a lot of price reductions because I think there's unrealistic listings out there that people are not going to buy at this point. The people that were forced to buy, that are needing to buy or had to buy,
they did it.
They've already bought.
Right. Yeah.
You know, and now we're in this position where we're kind of heading into the fourth quarter. And where do you see the fourth and going into the first quarter? Where do you see that heading into, Rich?
Well, I think like the cyclical market, I definitely think we are, we're heading into Halloween, Thanksgiving, Christmas. And I think that things always take a, they slow down. People want to focus on other things than buying a house, to be honest.
I think it's the best time to buy. Like if I was going to go buy, man, you guys go get your Santa Claus gifts and all these things. You guys go shopping and do your deal.
I
and I'll
agree.
be, while you're over here, it's like smoke and mirrors. I'll be over here making offers on houses, because.
No, it is because you're probably less competitive.
Correct.
There's less people out there because other people are thinking, I want to focus on the Christmas tree than on moving the Christmas tree.
Well, you got Halloween coming up, Thanksgiving. By the way, do you guys go big on Halloween?
It depends. I used to. I haven't as much the last few years. I think I'm still in that like kind of COVID depression thing.
What's the weirdest costume you ever dressed up with, Rich?
Ooh, okay. Oh, you know what?
I want to know, man. Let me know.
Shit, I'm gonna have to think about it, but I'll think about it and I'll get back to
What
you.
about you, Esmeralda?
I never had him. I was always cute.
You never dressed up? Come on.
I mean, I dressed
you
up, but
dressed
like
up.
nothing like weird, like just normal.
What about like a Power Ranger?
What were you? Yeah.
I was a Catwoman.
Catwoman. Okay, but
I was
is that
Catwoman,
what's is that?
I was
Okay,
what was that other?
Is that the weirdest costume though? That the Catwoman's not weird.
No, I wouldn't say it was weird, but I'll tell you what happened. So I ended up going to the mall and taking my nieces when they were young, and I had to dress up as Esmeralda because I had to go with their character. Right?
Wait a second, you dressed up as yourself.
Right, but like Esmeralda the Hunchback.
Yes,
Oh,
from
okay.
Notre
So
Dame.
I was
I-
confused for a second. I was like, what are you
Demi
talking
Moore.
about here?
So my niece is like, "Oh, you have to follow our little theme." So I did, and people were asking me for autographs at the mall. That was funny for me. So I was like, I was signing autographs like I was in Disneyland. I'm like, yeah, sure.
I bet you felt real special that day. You were walking like you were like the Jack in the Box head.
I was just standing there waiting for my niece to go around and get candy, and kids were coming up. They're like, "Can we take pictures?" I was like, "Yeah, sure."
When
Let's
I
look-
was in college,
Yeah.
I dressed up as something that I think now would be considered racially inappropriate. So
Oh wow,
Exactly. We want to know what was
man,
that
you can't bring that up. You gotta.
no, I can't. I'm
What
just going to leave it
happened?
at that.
outside of this.
Man,
No, I don't want this. I don't want the podcast.
Okay,
to be
maybe
finished
we
and
shouldn't
have it-
because it's from that look on your face. It's really on the other side of things.
No, it actually really wasn't that bad. But I don't want to.
Yeah, I never had any weird costumes, but I do appreciate like people that have actually
You
a
know
lot
what?
of creativity and they really,
Absolutely.
I do.
I'll tell you two stories. So my parents, they used to go to bingo a lot, right? And they dressed up on this costume, and my mom dressed up as a dragon, and my dad was the dragon slayer. And I think they got set. Yeah, it was
cute.
very cool, very cool. And you know what? One of the creativity is gone. Like they used to be like, well, now it's just like, hey, what I want to buy, and like what costume do I want to get from some. These people, like when they go there and they judge you, like there's some serious money. I think there was like $5 or $10 grand on the
Oh
line.
yeah,
Oh,
absolutely.
yeah.
There's serious money
I've
on
gone
that.
to clubs with.
Yeah, I mean, dude, it's
They
like,
do
why
well.
would you not put a little creativity into that, right? So,
Dan, what do you want to be for Halloween?
me?
What
I
was
don't
your
know, man.
weirdest costume? I know you had some. It's
Well,
your
I'll tell
mom
you.
and
I'll tell you
dad.
another story. So when we had trick or treaters, I was that guy that would scare people, right? And so
I could see
they
you
would
doing
come
that.
up. They would come up to the house. This is what they would do. So it would be real dark, and we had this red light on, right? And this red light was kind of floating. It looked like in the window, and we used to have this string, and it was this ghost that we put on there that people couldn't see with like this. It was like white. And we would actually put fishing line and we would like reel it in. So you would see this ghost coming across the yard, right? As these kids are walking in, right? Then I would take a shovel, and if you turn it on the back end and you hit it on the back end on top of the concrete, makes the loudest noise. I swear, man, it was the funnest part.
They'd run screaming.
It was the greatest part of doing
But you let
Halloween.
them get the candy first and do it after, or like
No,
As they're coming.
as they get it, and then they get it and they put it in their bag. It's like, okay, you guys have a good day. And I would hit it, and then they would freak out and scream and run off. It was the greatest, man. It was the greatest.
because when you go trick or treating, like normally some people have like haunted houses.
Oh
You gotta
yeah,
go through this
I used to
maze.
love that when I was a kid. The people who
and,
really went
like
all
people
out.
have.
Yeah.
So yeah.
Well, let's talk about this real quick. So let's go over here. We're going to end this show here in a second. But I wanted to bring this up because this is very, very important. we're starting to see a slight leveling off right here. And you can see this on this graph. This graph is starting to level off here. We've talked about it was heading to the 400,000 range. I think we're still kind of there, but I think overall we're starting to maybe dip down a little bit, or at least be at this nice. You can see this little hump right here where you're going all the way up to the top, and now you see a little dip right at the very top. So I think that's good news, man. I think we're starting to kind of level off here.
I think that's good news for us. I think that's good news for us as a community. I think, look, okay, so if you looked at, like, the numbers did go up slightly again in September, but they went up by $1,000. They went up by $1,500.
Oh, that's not bad
And
at
in
all.
July and June, they stayed the same. So it was 405, 405, and then 4065.
Yeah.
And those, July, August, and September, those are still months that are usually considered high volume, good sale months. And we didn't really go up a lot, which would be the months when you'd see more appreciation, I think, in years past under normal cycles. So I think that is good news that we're stabilizing, so that if especially if you're worried about the prices getting so out of control that you won't be able to afford a home at some point, this should make you feel like, hey, you know what? I think we're hitting that
So
plateau
if you haven't
for a
bought,
while.
it's probably a good time to start looking again.
If you were, and that thing too. And now maybe
I don't know. I
idea
just
where
feel
we're
like the
gonna be.
focus of people, though, is just not really to buy right now. And it's just maybe, look, the whole economy, it's not just the housing market, right? The whole economy is really just kind of in a position where we've all slowed down. It's not even just real estate financing. I think in general, because I think everybody's just trying to take a break. We went so fast in the beginning of 2021, all the way up, and let's say into the point of last month, on every industry. And we're still short, delivering goods and services. You got builders still behind on getting deals that are, closing on time, constant extensions. And so until that all recovers, and then I think, too, in consideration of people just taking a break, and I think a lot of people are happy that the holidays are coming, because now there's a different focus. And like you said, the ones that we're buying, they'll probably still buy, but they're probably going to look more towards
The end of the
year, or probably the beginning of the next year.
And then I don't know if you've seen the price of cars recently, but
They've gone up.
I've seen dealers put like $5,000 surcharges on their cars just in the last week on their
Well, they were
their new models
overbidding
coming
too,
in and stuff.
over
So
the ticket value.
oh yeah,
Yeah.
So maybe they're trying to make up for that because they're all scrambling to get cars because of the chip shortage.
Running at altitude says, I want to say home prices peaked during the prior 4 to 7 months. However, are leveling off over from current to past 3 months.
Yep, that's what the numbers seem to say here.
That's what the numbers are saying, and I think he's spot on with that. I think you're starting
That's
to
what our
really
numbers
see a
will
lot
say.
of leveling off, a lot of attention being focused on other areas. So go ahead.
I was just going to say, though, but I do think that a lot of people are going to be, I do think people are going to be very concerned about the rise in all other consumer goods, and that's going to kind of take the stage for, our economy for the next 6 months to a year, maybe.
Yeah, inflation's a big
that's
problem.
gonna
I think
be
it's
an
going to be.
issue.
Yeah, it's going to be an issue. We'll see if rates kind of counter that, because I think
Yeah.
that's one of the things that the Fed and that you'll see that maybe rates will go up a little bit. I don't think they're going to creep up to over 4%, but I do feel that they're going to continue on a small upward trend. You guys have anything else to say about the housing market?
Don't give up if you haven't gotten a house yet. It's still out there for you. You can still make it happen.
I think there's a song that says, "Don't give
Yeah.
up."
And I think
Yeah.
like 350 is a good price point.
Yeah.
Like it's a comfortable.
Yeah, but you know
don't
what? At
give up.
350, just understand you're getting into a position where you're going to have to put your boxing gloves on. Because
I
at
know.
some point,
Yes, it's
you're
true.
going to have to duke it out, and you're going to have to make sure that
Yeah.
either you're connected
Yeah.
because you know that agent, and you're just like, hey, you know what I
Yeah.
mean? We got this.
Definitely,
I know you.
Definitely, you
Yeah.
need a whole. You need some handshakes.
Yeah.
But,
Maybe a wink, like, I got you type
Yeah.
of thing.
But
All right, guys,
but-
listen to the show.
All right.
You guys, thank you so much for tuning in. This is the French Workbench Podcast. We're an hour in, so we're going to end now. Thank you, guys. If you have any questions, please put comments in the comment section. Also, we'll be back on Saturday. New guest, great information. I always pride myself. This is the most real and behind-the-scenes information regarding financing, real estate, money talk, entrepreneurs. We're on a crusade to 1,000 subscribers. We need your support.
Yes. Please
Please give us the support.
Yes.
Like
Hit
the like
like.
button. And guys, we'll see you on Saturday. Thank you so much for tuning in to Cece, Cyrus, Ver, Claude, Running at altitude. Hopefully I got everybody. You guys will see you Saturday. Thank you for watching an episode of the French Workbench podcast. If you want to tune into past episodes, please subscribe to my channel now. Also, if you want to look at our audio only options, we do have iTunes and SoundCloud.